Good morning. Welcome back to the Broadcast Retirement Network. This is BRN Weekly for Saturday, May the 4th, 2024. And our top story today, the Fed nixes a rate hike, but stocks still gain. And here to break it all down each and every week, Jane King joins us this morning from the NASDAQ. Jane, always great to see you. Thanks so much for joining us on the program this morning.
Yeah, great to be here, Jeffrey.
All right, Jane, we're going to get into the Fed in a minute. Interesting decision this week, and we can talk about the markets. So let's talk about this jobs report. We're recording this on a Friday morning because we don't want to work on the weekends and we can avoid it. Jane, tell us about this jobs report that just dropped.
Well, interestingly, it's directly linked to the Fed. So let's go over the numbers. So weaker than expected. I guess I would say this jobs report was good for Wall Street, bad for Main Street. So we had 175,000 jobs added in April. That was weaker than expected. The unemployment rate ticked up to 3.9%. The labor participation rate, just over 62%. And where the job growth was, healthcare, that continues to be a big job generating sector, social assistance, and also transportation and warehousing. So the thing is, the weak job number means that the Fed maybe has a little more flexibility in cutting interest rates this year. So we are seeing the markets, at least initially, respond positively to this number.
All right, let's talk about the Fed, as you alluded to, and as the title of the program today alludes to as well. They nixed, or Jerome Powell and the Fed nixed a interest rate decrease,
Yeah.
change, right? Right.
Yeah.
So sorry, I'm like losing my mind. So I had to think about what direction it was going. Anyway, so they nixed any action for the foreseeable future. Give us your take on that.
Well, what was interesting is that Jerome Powell said in the press conference, he specifically talked about the job market. And so Wall Street kind of read into that. We need a weaker job market before the Fed starts cutting rates. And we got that with the number today. Now, I'm also hearing some talk about if we would start to see this unemployment number, which came in 3.9% in April, we'd start to see it go above 4, then we're going to start to hear talk of a recession. And so it feels very precarious where we are right now in the economy. It could very easily go one way or the other. And I'm not sure which camp I fall in. I can make an argument for both.
Yeah, and to that point, Jane, I think Barron's released a poll of fund managers. Those would be people that invest assets of others in mutual funds, ETFs, et cetera. They were actually very bullish in there. This must have been before some of this recent news, I guess. It's all snapshots and polls. First of all, it's a finite number of people. It's not always representative of 330 million Americans, but be that as it may, very bullish in the economy. They expect another 10% gain in the stock market. Going back to what we talked about several weeks ago, remember we talked about like 40% return? Again, I wonder if they must be in the bullish camp, but they have to be because they're fund managers and they want to attract assets to their funds.
Well, that's true. There's sales that goes along with this. And if you're dour and talking down the market, people are going to put their money elsewhere. I mean, so people should just be aware of that there is some sales that goes into it. And sometimes it's good to invest, but also just know that that's part of the aspect of all of this.
And Jane, just to wrap up, AI was a theme we talked about last week. You had gone to some AI events. I think Samsung in particular, if I'm not mistaken. This week you attended another AI event. So are you getting scanned so that they can replace Jane King from time to time when you go on vacation
Yeah,
days?
I'm gonna have like an avatar here. Hey, if I can get some sleep, I'm all for it. So, this was an interesting company. So this was a company called Sapphire, and they do kind of back office, all those financial settlements that need to be done at the end of every trading day, which in some cases can take 4 or 5 days. And they can use AI and automation to have them cleared in almost real time. And Kevin O'Leary was there from Shark Tank. I think he might be an investor. He didn't say that for sure, but he was there and spoke and stood on on the podium and everything.
I would
So,
imagine, but not to interrupt, but I would imagine he's an investor because I don't think Kevin O'Leary would be anywhere if he's not getting paid.
I
And
think
it's
that
my
that's
opinion.
probably true. And I
He's a
brought my son
start.
along with me, my 16-year-old son, and he was excited to meet Kevin O'Leary. And he also was excited to learn about Sapphire. And, he's the perfect age to kind of learn about this. So interesting. I'm just hearing a lot more talk about AI and all kinds of various places right now.
See, Jane, not to extend our segment too long, because I know you have to go to do all your other TV appearances. But I see this is where I see AI being really valuable is in the back office, automating tasks. I just don't see it, my personal opinion. I don't think people want to interact with a chatbot. I mean,
Mhm.
hey, if you've ever done it on Amazon, which I think is one of the best services out there in terms of how they work with customers, it's so impersonal. It is not, so I don't think it's there. But the thing you're talking about, clearing transactions, trading, doing the duplicitous work or the duplicative work of and tedious work, by the way, I think this work it can add value.
No, it really seems like an interesting and the current system is kind of antiquated. All the banks use different things. It takes a long time. It shouldn't take 5 days to put money from your bank account into your brokerage account, but it does. And so this company helps speed up all of that. So look for they might have big things someday.
I think so. Well, if
Yeah.
you're thinking about investing, and again, we're not going to, Kevin O'Leary seems to have some success. That's why they put him on Shark Tank. So, you may want to sniff that one out, but we're not going to provide any advice.
Yeah.
Jane, always a pleasure to see you. Thanks so much for joining us. And next week, you're going to be off. So we'll have Christina Hooper from Invesco. Jane, enjoy the week off, and we'll talk to you again very soon.
See you then.
Thanks, Jane. Great to see you. Thanks for sharing your perspective. We'll talk to you again next week. And when we come back, we take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Well, it was a great week of great shows with great topics and, of course, great guests. We kicked off the week with a look at how mentally stimulating jobs may reduce cognitive decline. Let's take a look.
We examined what kind of jobs people had during their midlife, and then we looked at the amount of dementia, mild cognitive impairment after the age of 70. So this was a big study in Norway where we basically they invited the entire part of a county to be examined, those who were over 70 years of age. And what we found was that those who had more cognitively demanding jobs during their work life, they had significantly lower risk of mild cognitive impairment and dementia after the age of 70. Yeah, so there's a theory. It's called the cognitive reserve theory, and it states that through education and cognitively stimulating activities, and also others, other kind of activities like physical activity, you could help stave off dementia by making your brain more resilient to the injuries or to the disease that can develop, so that you can probably delay, at best, maybe even prevent having dementia or mild cognitive impairment. What we did is that we had this index that we gave every occupation the amount of routine, how routine oriented each occupation is, and then we categorized people into four trajectories, and there were different jobs in each group, but they were similar on this routine index scale. So in the group that were the most mentally stimulating, they were mostly teachers. And in the group that were least mentally stimulating, they were mostly helpers and cleaners, road workers, and mail carriers. So what we found was that really the kind of tasks that were most important were the non-routine analytical and non-routine interpersonal scale. So that means to analyze information, to engage with other people, to coach, and also to interpret information from others and also give information back. Whilst more routine-oriented, both manual and cognitive, like to operate equipment and to do like filing, were least favorable.
And we also discussed how sticker prices fail to capture the true college costs. Let's take a look.
Well, the thing that's most easily known is this thing called the sticker price. The sticker price is what gets promoted. You read the newspaper, it says, college costs $80,000 or some, very large amount of money. And everyone kind of knows those numbers. The problem is that's not really what most people are going to end up paying for college. If you're a very high income family and you attend a handful of highly selective institutions, those students tend to pay that much money. Everyone else is paying less. And the problem I think that we really face in terms of college pricing is that like how much less you have to pay is not easy to figure out. There's two main forms of financial aid: the athletic scholarships, but if you're 6 feet 8 inches tall and have a great jump shot, you can get one of those. Those are hard to come by.
Not me, Professor.
So, really for most people, the two main forms of financial aid are either need-based or merit-based. Need-based financial aid is really just a function of your income and assets. So when you fill out the FAFSA, if you were able to do it this year, because there was considerable issues with that this year. But in general, if you're filling out the FAFSA, the whole point of the FAFSA is to record a lot of detail about your income and assets. And then behind the scenes, there is this fancy formula that calculates an amount that indicates how much you can afford to pay, quote unquote. And that's, I'm putting quotes around that on purpose because obviously there's no right answer to that question. It's giving some indication of how much you can afford to pay. So in some sense, if you think about it, what happens when you're filling out a financial aid form is you're doing the equivalent of doing your taxes twice. You have to do your taxes and the first time for your income. And if you think about how much fun it is filling out the 1040 form, you're not doing anything that's really a lot different. As a matter of fact, in the new world, if FAFSA simplification actually worked well, what's supposed to happen is you're supposed to click on a button and all the IRS information that you've already filled in is supposed to get dumped automatically into the FAFSA form. So you're doing taxes on the basis of your income, and then you're doing taxes on the basis of your assets, because you don't pay, if you have an account at Vanguard, income tax system doesn't really tax the balance, but the financial aid system does. So income and assets, you do your, a tax form, the equivalent of a tax form for income, the equivalent of a tax form for assets. It goes into the computer does its magic and it spits out a number, which in the new world is called the student aid index. It used to be called the expected family contribution. That's the result of that process. That's how need-based aid is determined as a result of that number. So it gives an indication of, like, roughly speaking, how much you can afford to pay. And then the college is going to have this amount that they sort of want you to pay, and the two things don't necessarily match, but they take it into consideration.
Yeah.
So if you make $50,000 a year and you have no assets, they can't really expect you to pay a whole lot. The calculation would come out and say you can't really afford to pay a whole lot. The college will charge you less. They probably won't be charging you zero, which really is, roughly speaking, what you can afford. But they will charge you less. That's need-based financial aid.
Well,
Merit-based
Professor,
financial, go ahead.
no, go ahead, finish. I interrupted you.
Yeah, so merit-based financial aid is different. Merit-based, if you know, you put, so in the old world, when tests were required, and many institutions still it's test optional, you submit your test scores, your SATs or ACTs or whatever, and you did well, and then you have high grades in school, in high school, you can get financial aid based on that as well. The interesting thing about those two things is they tend to offset each other. So if you're eligible for some need-based financial aid and you're eligible for some merit-based financial aid, they tend not to give you both. They substitute for each other. So in reality, what happens is the higher income students who get the merit aid get to keep the merit aid. And the lower income students who get the financial aid and the merit aid get, you know, they can label it however they want, but they're only getting one of them.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, then visit our website. We're back again tomorrow with BRN Sunday. I'll be joined in the first segment by David Levine, Kevin Walsh, the Legal Eagles, and they're of Groom Law Group. And then Oliver Rennick of the Schwab Network will be here to help summarize all the events that have happened in the week with markets and the economy. So until then, I'm Jeff Snyder. Stay safe, keep on saving. Don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.